Most people watching this think Europe's energy problem is about a war in the Middle East. That is only half of it. Right now, two separate crises are hitting the continent at the exact same time, and almost nobody's talking about the second one. Since the 28th of February 2026, Israel and the United States have been in an active conflict with Iran. It is not the Ukraine war people usually picture when they hear the war is affecting energy prices. This is a different conflict entirely, and it has gone through ceasefire after ceasefire, each one collapsing within weeks. The part that actually matters for your energy bill is the Strait of Hormuz. Iran has repeatedly closed or restricted it, and as of the most recent reporting, it remains effectively shut. That single stretch of water carries roughly 1/5 of the world's liquefied natural gas supply. When it closes, that gas does not simply appear somewhere else. It disappears from the market. Here is the number that should get your attention. Europe's benchmark gas price, called Dutch TTF, has climbed by roughly 120% since the start of 2026. By the middle of August, it was trading above €60 per megawatt hour, nearly double what it was on the same day the year before. To be clear about how bad this is and is not, it is still well below the peak of the 2022 energy crisis, when prices hit around €350 per megawatt hour after Russia invaded Ukraine. So this is not that yet. But Europe is heading into winter with storage levels lower than they should be. And winter is exactly when demand goes up and supply options go down. Here is what most coverage misses. At the same time the war is choking off gas supply, a severe heat wave has been hitting Europe through the summer of 2026, and it is attacking the continent's electricity supply from a completely different angle. In France, extreme heat forced EDF to cut output from a meaningful share of the country's nuclear fleet in early August, because nuclear plants need cool water to operate safely, and the rivers were too warm. At the same time, drought has reduced hydroelectric power generation across several countries. So right when electricity demand is spiking because everyone is running air conditioning, two of Europe's biggest clean power sources are producing less, not more. This is the part that explains why your friend in Spain might be paying a completely different price than your friend in Germany. Europe's electricity market is built so that gas sets the price far more often than you would expect. Gas only makes up somewhere around 18 to 20% of the EU's total electricity generation. But because of how the market is structured, whenever gas gets more expensive, it drags the price of all electricity up with it, even the electricity that came from wind or solar or nuclear. Countries that lean heavily on gas, like Italy and Germany, have seen day-ahead electricity prices climb to somewhere between 120 and €150 per megawatt hour. Countries with a more diverse energy mix, like France and Spain, are seeing prices closer to 60 to €80 per megawatt hour for the exact same underlying shock. Same crisis, very different bill, depending entirely on what your country's power grid is built on. This is not an abstract macroeconomic story. Economists at Oxford Economics estimate Eurozone inflation could run close to 3.5% in the second half of 2026 under current gas pricing, up from just above 3% in their earlier forecast. The European Central Bank's own June projections already had inflation sitting around 3.5% for the back half of the year, specifically because of energy costs. And markets are already pricing in a response. There is a widely held expectation of another interest rate rise from the European Central Bank in September, roughly 1/4 percentage point. If that happens, you are looking at a genuinely uncomfortable combination: higher heating and electricity bills arriving at the same time as more expensive borrowing. I want to be straight with you about what is confirmed and what is a forecast. The gas prices I just gave you are real, dated, and confirmed. The inflation numbers are estimates from economists and from the European Central Bank's own projections, not confirmed outcomes. Forecasts get revised constantly, especially in a situation this unstable. Nobody, including the people making these forecasts, actually knows how this war ends or how cold this winter gets. Both of those things will move the final numbers more than anything else. So when someone tells you Europe's energy prices are up because of the war, they are only telling you half the story. It is the war closing off supply and a heat wave cutting into production, landing on the continent in the same season through an electricity market where one fuel source can drag every price up with it. That combination, not just the headline everyone already knows about, is what is actually going to show up on your bill this winter.